Happy Friday, everyone. It's time for your daily crypto wrap-up. Let's jump right in because there's a lot to unpack. Bitcoin had a bit of a scare, dipping below $120,000 before bouncing back to around $121,100, and that volatility left its mark with over $529 million in crypto longs getting liquidated in just 24 hours. So if you felt that one, you're definitely not alone. Meanwhile, over in traditional markets, Nvidia just hit a record high market cap of $4.75 trillion, and silver is having its own moment, reaching a new all-time high of $50 per ounce, so it's not just crypto making waves today. Speaking of big moves, BlackRock is clearly not slowing down. They picked up $426 million worth of Bitcoin and another $148 million in Ethereum, and they now hold over 802,000 Bitcoin worth about $98.5 billion in their spot ETF, which is just absolutely massive. On the institutional front, we're seeing some really interesting developments. Luxembourg's sovereign wealth fund just became the first Eurozone state fund to put 1% of its holdings into Bitcoin ETFs. And State Street, which manages $5.1 trillion, says 60% of institutional investors are planning to boost their Bitcoin and crypto allocations. So the big money is clearly paying attention. Deutsche Bank is even predicting that central banks could be holding significant amounts of Bitcoin and gold by 2030, which feels like a pretty bold call, but maybe not as crazy as it sounded a few years ago. Over at the New York Fed, President John Williams is calling for more rate cuts this year, and interestingly, Bank of America came out saying investors aren't actually penalized for buying stocks at all-time highs. In fact, 5 years later, the returns have been stronger. And the S&P 500 just keeps proving that point. It's hit 90 all-time highs over the past 2 years and stayed positive through the last 6 government shutdowns, including this current one where it's already up 1%. Poland and the Philippines both cut rates again. Poland down to 4.5% and the Philippines to 4.75%, so the global easing cycle is still very much alive. Now let's talk altcoins and some of the wild action happening there. Solana's total value locked just hit a new all-time high of $42.4 billion, which is pretty incredible momentum. And over on BNB chain, a token called Bun shot up over 280% and crossed 1 million in trading volume, so there's still plenty of volatility to go around. Ripple is expanding into Bahrain with a partnership to pilot digital asset projects, and Animoca Brands announced they'll be tokenizing special purpose vehicles primarily on the XRP ledger. So XRP is getting some serious real-world utility attention. On the regulatory side, the Bank of England is pushing for stronger stablecoin rules, which makes sense given that Coinbase and MasterCard have both been in advanced talks to buy stablecoin startup BVNK for around $2 billion. And there's a growing sentiment that stablecoins are becoming the new petrodollar and the most effective tool for US soft power in the 21st century, which is a pretty big claim, but one that's gaining traction. Binance founder CZ shared that BNB chain gas fees have dropped by 2,000% this year. Chainlink launched a new RPC endpoint for Hyper-EVM as a public good, and Monad just announced their airdrop claim portal opens next Tuesday, October 14th. So mark your calendars if you're eligible. In the revenue wars, 4mem just flipped Hyperliquid in 24-hour revenue, and TokenWorks did the same to PancakeSwap. So the competition is heating up across DeFi platforms. And finally, a fun forward-looking note. The head of crypto at Kalshi says prediction markets right now are just a warm-up for the 2028 presidential election, which they're calling 1,000 times bigger. So buckle up because we're still early in this cycle. That's your full recap for today. Thanks so much for tuning in, and I'll catch you tomorrow with more updates from the wild world of crypto and finance. Take care.